Welcome to Alpha Bytes, where each week you get a behind-the-scenes peek into crypto researchers looking to find tomorrow's alpha. I'm your host, Marconi White. Today's show is hotter than Nick Carter's timeline when he's going after the Bitcoin maxis. It's always on fire. I'm going to ask the guys what they would do with Vitaliks' Twitter account if they had it for 24 hours. But first, Ray's looking at Bitcoin's death cross rally and asking, is it going to last? We're going to be tearing down arbitrum to give you the good, the bad, and the ugly. King Goaty has 3 projects he's going to like or spike, including a Telegram bot launching and immediately rugging, FriendTech surpassing 20 million in TVL, and Vitalik co-publishing a new privacy-preserving protocol. Ben Lilly's asking if the market is ready to drink the Bitcoin Milkshake, and we've got much, much more. I've got Ben Lilly, Ray, and Cody in the studio. Gentlemen, welcome. We're going to be kicking off with the market update, but before we do, I want to give a shout out to all you, our listeners, for pushing us over 550 subs on YouTube this past week. Thank you for showing up and giving us support each week. It truly means everything to us. Our mission remains to upgrade the crypto conversation and be a force for shaping the direction of the industry that we love. And we need your help to do it. So if you haven't already, please take a minute to click the link below and answer a couple of questions about what you are looking for in this space so we can see about how we can further fine-tune what we're doing. All right, that's enough of a plug for me. Let's move on to the market update. Ray, last week you said we were at home on the range. I was thinking about cows and other pastoral views. As price action was just continuing to range in a predictable manner, we've had a bit of a bump since then. Tell us where we headed.
Funny thing is, we're back in range, the exact same range that we were in last week on the last episode. But I think that perspective is everything, and so is patience. So as kind of a summary of how I kind of see things right now, it's that risk is unpopular to retail and institutions, thanks to US Treasuries and MMAs. Inflation is ticking up right as the Fed is digging in on its little pause stage, and certain metrics on the macro side are starting to come to head, showing cooling in the economy. Meanwhile, Bitcoin shows a bit of newly emerged short-term bullish momentum, right as Franklin Templeton files a spot Bitcoin ETF today, and we get closer to the Bitcoin halving. So some things that I'm looking at from the vantage point of perspective that impact my thesis on crypto and Bitcoin price action are the 2-year Treasury yields topped 5% this week. The Dixie, or the dollar index, is snapping back after yesterday's brief downside pause, so it's chasing after 105 again. Oil prices have risen to a 10-month high, and analysts are predicting the largest monthly jump in energy prices in 14 months. The August CPI data is set to release on September 13th, tomorrow. Wednesday of this week, and currently the Fed Watch tool shows 93% consensus that the Fed will hold on rates. Meanwhile, Treasury bills from 1 month to 1 year are offering 5.28% in yield, and we've got short-dated USTs outpacing the longer dates. In the money markets, there's more than $880 billion that has flowed into the space this year, to a total of $5.62 trillion. So for me, the question is, and I think for other investors, the question is, what needs to happen to eventually convince investors to move further up the risk curve and to chase after risk assets? So I think what we see kind of impacting price action this week is that gasoline prices and energy prices are forecast to contribute to the uptick in headline CPI. I think data from AAA showed that there's a 6.6% increase in retail gasoline prices, and core inflation is expected to rise by 0.2%, according to the Bank of America. So obviously, like, core inflation is the area to keep an eye on. Rent costs are expected to trend down, and other metrics that are interpreted as having an impact on pushing goods and services costs down they can also be interpreted as having that impact. So that's a lot of garble on the macro side. What does it actually mean for Bitcoin? Well, after the early week dip to 24.9K, price found support here as we anticipated. Like, it found support at 25K, and we snapped right back into range. Let's just say the reason is Franklin Templeton, a $1.5 trillion asset manager applying for a spot Bitcoin ETF. That's just another big boy in line for what seems to be the inevitable eventual approval of this long-awaited ETF that some of us have been waiting 6 years for. But beyond that, there were some notable things on the TA side for Bitcoin. The check-in money flow indicator, it's a volume-weighted average of accumulation and distribution of a 21-day period. It flipped green, trading over zero for the first time since July. The daily RSI on Bitcoin is at 47, and we've got a green histogram on the MACD, and the MACD signal line crossed above the MACD on August 28th. So I think essentially what we're seeing is the early emergence of a little short-term bullish momentum. And on the daily time frame, prices right now en route to trading above the 20-day moving average at 26,200. But overhead, we still have the 50-day moving average and the 200-day simple moving average as expected points of resistance, which is at 27.6K. So that's a point where I'd expect shorts to open if today's intraday action fails to cap upside in the current $26.5 to $25,000 range. If we get capped at the range high, then I'd expect shorts to open right at the top of today's candle if like insufficient news flow and volume and spot and futures fail to kind of maintain the current bullish price action. On the higher time frame, if you go out to like the weekly, we've still got this death cross between the 50-day moving average and the 200-day moving average. And typically these death crosses are followed by at least 2 months of bearish price action. But if you zoom out to the 6-month plus time range, we can see that Bitcoin continues to trade in the exact same price range where it's been for the last almost 7 months. So the exact same downside and upside targets that we've been tracking over previous episodes remain intact. Lastly, in derivatives markets, the Bitcoin's futures premium is at 3.8%, meaning it's like 5% below the neutral. It's below the 5% neutral threshold, and that's been the base case for the last 3 weeks. So I don't see much changing sentiment-wise with traders there, despite the dip below 25,000 and then the subsequent 5% bounce. On the options front, things have changed a little bit since September 11th. The 25% delta skew metric was previously pointing to a 9% surcharge on protective put options, but now that indicator shows kind of balanced pricing between call and put options, meaning that the market is possibly no longer bracing for heavy downside impact, like if we dropped to 23K or lost that 23K handle. So I think given the uncertainty surrounding the CPI of this week and retail sales data coming out on Thursday of this week, the odds are that crypto traders will avoid risk and favor kind of like a return to mean, which in this case would mean that price probably remains within the 25.5 to 26.2K range. And let's see if shorts open shorts at the top of that range and we do the same rinse, wash, repeat price action that we've been seeing for the last few months.
So it sounds like cloudy with a side of meatballs. We continue to have a lot of overhang on the macro side. We see mixed signals coming in on the Bitcoin side. And as you're saying, we're just going to continue to see some range until we really break out of this.
Basically, but I was surprised to wake up this morning and see that price, actually last night around 10 p.m., to see that price had reclaimed the previous range. I thought we were going to hit 24K, and given kind of like all the rollover of momentum indicators on the higher time frame, I thought we were going to roll down and maybe touch 23K and have a little bit of volatility in that range and see if buyers were interested in catching those kind of new lows. So I was surprised to see price where it is right now. Maybe someone got news of the Franklin Templeton ETF filing and front ran that, and that's why why we are where we are right now. Let's see if shorts open at the top of the range to confirm that. But this short-term bullish price action is semi-surprising to me.
Right. Well, we did tell everyone last week, don't catch any falling knives. Ben, I want to ask you, is there anything here? There was a lot of data that Ray just unpacked. Did you have anything to add to that, or anything that you saw that was maybe counter to his assessment?
Not really. It's just been a long 6 months. I mean, that was when we kind of hit 28K for the first time, pre-FTX or post-FTX, I should say. And we've been trending in this range kind of 2.5K higher and 2.5K lower of that kind of midline price point. And when we look forward, there's really not much on the radar on the macro side. We've kind of had Jackson Hole. We've heard what central bankers are focused in on. It's inflation, and they're really worried about it. They're concerned. And rates, they're kind of plateauing at the moment. We're already seeing China cut them down a little bit. And the fact that we're talking about all these things means like there's not much happening right now in the crypto market. And really what it comes down to is just, I hate to say it, but it's the ETF discussions. And there's nothing more. Yeah. And we do have some discussions on the regulatory front for DeFi. And because it is a little bit negative in a sense, like that's kind of encompassing crypto Twitter right now. But any sort of positive activity that takes place, I think is going to have outsized moves on the chart once it comes.
So there is more news on the front, but we have to wait. We know the ETFs can take a while for them to be approved. Ray has in the past warned us about maybe some black swan events, like what may happen to Binance. But until those moments happen, or we see a relief on the consumer, which it sounds like from Ray's analysis may take some time, we may be in a range. So I'd say if you're out there and you're wondering, well, when is this going to change, check back with us next week as we continue to monitor the situation and to see if we're starting to see some breaks. But right now, we're going to be looking for some news. All right, with that, we're going to move on to a new segment, something we have not done before. So I'm very excited to be introducing this, something that we've sat down and talked about different ways in which we want to see the market kind of mature and give us better information on opportunities in the market from an investment standpoint. And so today we're going to be taking what we're going to call a token teardown of the ARP token. And we don't mean that we're just going to be talking smack the entire time. No, we're actually going to take what we can from of the ARP token, look at it through a few different lenses, and come up with our perspective of longer term opportunities and the sustainability of the ARP token. So with that, I'm going to hand it over to you, Ben, to start talking about token usage. Take it away.
All right. I'm excited about this new segment here, just to be clear, and it's probably going to iterate a little bit, I imagine, over the next few weeks as we find our footing. But to try to give a first attempt here on the token teardown, I'll hit on some token usage for ARB. I mean, when it comes down to it, we look at the token. When we think of usage, it can either be simply used for a payment or it can be used as a store of value. And those usages end up helping to absorb any price action. If anybody read the blend last week from Espresso, I talked about elasticity and the fact that a token can be used as a store of value or collateral will change the overall elasticity and the ability for the token to absorb price when people are trying to sell. And because velocity, this is a metric that indicates how many times a token is exchanging hands. It's a little bit like volume, but you got to think of it like if you had $1 and it got shared with 10 people and there's only $1 in the room, that velocity reading would be 10. And then if it was $2, same 10 people, and it moved around, it would be 5. Now, this velocity has been trending lower, which when it comes to a price level, if velocity starts to uptick here anytime soon, when it comes to ARB, it's going to be very responsive in terms of price, and we started to kind of see that take place in the market. And again, that's because this token lacks a lot of usage and the ability to absorb any changes to its supply, and it results into price. And when it comes to usage, I don't like it. It's not in ARB's favor right now. I would like to see greater usage of the ARB token outside of just being a token that is sold into the market. The second category I think we can hit on here on this token teardown is what is the TVL and the diversity of the arbitrum ecosystem. And I actually have some optimistic talking points here. Diversity is good for the TVL. We can see there's 27 projects with TVL with over $10 million on it. This is good. It's a bit concentrated with 25% in GMX, and to me, that means it's not great, but it's still okay. It's a layer 2. This is still an emerging part of the ecosystem for ETH. So the fact that it does have 27 projects with that much TVL, I think, is the point to really focus in on. And the additional data point that I want to hit on is that there's still over 1 million ETH locked into Arbitrum, which is a higher data point than at any time in 2022. So while it has been trending down, and you can really see that in some of these stats of late, like I pulled up the top 10 protocols on Arbitrum, and they're all just bleeding TVL on the last month. But the fact that the TVL of ETH is still higher than 8.2022 is something to really consider, which means there's a lot of potential opportunity here. Just ARB needs to really get back to that usage discussion, start to create better usage for its token, have some more TVL of the ARB native token, not necessarily ETH. And I think that would go a long way for this ecosystem and project to help bolster price and help it mature. And so to sum it up, usage is terrible. TVL diversity is great. And moving forward, what I'll be looking for is to see the usage of the ARB token convert to TVL.
Okay. Now, what I liked about your analysis, Ben, is that we stepped away from price, right? It's easier for, I think, the market to really just glom onto the price movements, which in general in a bear market, obviously we've seen downtrends, many tokens down by 90% from their all-time highs. This allows us to get a better sense of, is this a token in an environment, a network that we could see responding and reacting once the market conditions change? Now, I think, again, to summarize what you're saying, we need to see some better usage of the ARP token. And in your mind, what might that look like?
Yeah, so if we think of ETH, I think this is the most mature asset when it comes to smart contract protocols. It has a lot of usage outside of just spending the token to go ahead and create a smart contract or pay for the fees for a transaction. When it comes to Arbitrum, you don't even need the ARP token to go ahead and pay for a transaction, right? So even its usage at the lowest level of kind of money in general, it doesn't really have that trait. It needs to have that in some capacity. And then using ARP tokens to create smart contracts, using ARP tokens as collateral, this is a much higher order usage of a token. But if you can get the first basic couple of traits for usage right, then you can start to unlock those higher levels of usage. And then that's the TVL where it becomes very sticky. These act as sinkholes, and any changes in supply can be better absorbed by the ecosystem. And right now it doesn't have that. So if there was a big unlock coming, or one of the protocols sitting there wanted to go ahead and sell their tokens that they acquired from the airdrop, we're not going to be able to absorb it at the moment.
Okay. Good assessment, good analysis. All right, so that was more looking at the valuation or the value of the token in the ecosystem. Ray, I want to bring you up because we do want to talk a little bit about price. So walk us through what you're seeing from a technical analysis standpoint and what people may be on the lookout for in terms of price action.
Yeah, I don't think it's looking good. Price has hit a new all-time low yesterday at like 73 or 74 cents. It broke from a range that it had been trading in since May of 2023, kind of that $1.15 to $1.30 range. So things aren't looking good. We saw sell volume really ramp up as price broke down, which is not a good sign. Earlier today, Cody pointed out that whales and market makers are dumping ARB, the whales dumping it at a loss. So the data nerd points out that 7 whales sold 21 million ARB, $16 million worth at a loss of $8.15 million. So it's a 34% drop. Wintermute Trading also deposited 8.35 million ARB, around $6.5 million, to centralized exchanges. And usually when market makers or whales deposit tokens to an exchange, they're doing that with the intent to sell, either hedging or selling. So, I don't think things look good for ARB on the price analysis side. You can look at these assets within two hemispheres, one being the fundamentals of the project. Do those kind of inspire some sort of confidence to go long off of, swing lows like this? And then the other being just raw price action. Is there a reason for price to go up if the entire market begins to go up, or if sentiment across the market goes up, or if Bitcoin dominance falls and altcoin dominance rises and we see altcoin prices as a whole begin to rise? So if we were to see the second hemisphere where market conditions and sentiment improve and tokens improve as a result of that, then what traders would want to look for is a reclaiming of the range low and that 91 cent to 99 cent price zone. That's also where the 50-day moving average is. So typically that's going to be resistance when you're trying to reverse the trend. If price could reclaim that $1 to $1.15 range, then it's time to start looking at on-chain fundamentals, governance proposals within Arbitrum. Maybe Ethereum has some new EIP rolling out. What's happening in DeFi? Are we seeing an uptick in usage and fees being generated from Ethereum transactions and such? Those are the sort of things I'd look at to see if price can then flip that kind of $1.15 resistance and rally above $1.30 to then kind of establish a new uptrend. So that's just the raw price action. If you look at the Fibonacci retracement indicator, price went to 0% yesterday. So I would expect resistance at the 38.2% fib level. That's generally where price hits a hang up. That's at 115. Beyond that, the 61.8 is also usually like a support resistant flip area, and that's near the range high at $1.40. So if price can bounce off the 38.2 and bounce off the 61.8 and flip either of those to support, then that would be highly encouraging, and you would likely see, if that was to happen, then there would probably be something really good happening in the market that's benefiting all altcoins and Bitcoin also. So I don't know. This is an isolated asset, so that's just the raw price action there. But I think what really would inspire confidence for people to invest in this would have to be on the development side.
Yeah, no, that's a lot of. I think about the headwinds for this token. You just mentioned it hit an all-time low. You talked earlier about market sentiment being really risk off at this point at a more of a macro level. In your mind, are you surprised to see this hit new range lows, or are you expecting Arbitrum and sort of its competitors to kind of be in the same class?
It doesn't shock me because ETH broke range and hit 1,500 yesterday, which was kind of a new low on the medium term. So if ETH does well, then Arbitrum does well, and kind of vice versa. Yeah. There was a narrative that everyone, airdrop holders, were playing with Arbitrum, and that narrative has just reached an exhaustion point, and people are focused on other things. So I think what we saw, the capitulation from whales, is them throwing in the white towel, even if it be temporarily, to focus on other things which might be profitable. So I had that same narrative for Arbitrum, that the sequencer would yield fees back to the token, that DeFi protocols would use their token allowance to produce yield within DeFi, and that would be to the benefit of the token. And I gave up on that when price hit $1.35 about 2 weeks ago and finally exited that airdrop position. So I think the narrative has run out of runway.
Narrative exhaustion. Okay, good.
Basically.
Yeah, good perspective. Okay, so right now our analysis has gone through token supply and the TVL. Ray just shared more of the TA. We're going to shift to look more at the tech design and robustness of the ecosystem. For that, Cody, I'm going to bring you in. I know there's always a lot to unpack here. It can get rather technical, so we'll ask you to kind of direct us towards what you think is most relevant for the audience. But give us your perspective on the tech design.
Yep. So I'm going to keep it relatively simple. And starting with that Arbitrum is an optimistic rollup that is rollup that is used to scale Ethereum. And the idea behind it is that the transactions are computed off mainnet. Computation occurs there, and then proof of that is sent back to Ethereum. And they are patched together, multiple transactions, so it's cheaper and you don't have to communicate that often with the chain. In optimistic rollups, transactions are assumed to be valid by default, and it is only when someone challenges a transaction that we go back and see if the transaction is valid or not. So that makes it that the sending back messages and whatnot to mainnet is cheap, and you don't need to look into every transaction and compute whether it was valid or not. So as well, we were talking about sequencer nodes before, and the decentralization of the sequencer. So what are sequencer nodes? They're responsible for ordering transactions and sending them back to mainnet. And one of the, narratives for Arbitrum, which I think is true, is that in the future, ARP token will be used to decentralize the sequencers. So similar to proof of stake tokens or chains, having ARP tokens will be used to, people will have to put up stake of the ARP token in order to become a sequencer, and they can earn fees from that, But they can also be slashed. That is, their token holdings can be slashed if they perform maliciously. And it must be said that Arbitrum is a little bit farther away compared to other optimistic rollups in being decentralized. It's not really fully there, but it does allow for certain things that other rollups don't. For instance, anyone can withdraw funds and not be barred to do so from operators. Another important thing that distinguishes Arbitrum from other optimistic rollups is that code is compiled in WebAssembly. WebAssembly is a compiler and binary instruction used normally for web browsers, but it can be used by other projects, and it allows you to compile Rust, C++, C code, etc. So the smart contract developers don't need to really use Solidity to deploy a contract on Arbitrum, which allows a lot of other developers and probably different culture and ideas to go to Arbitrum as compared to Optimism, which only takes in Solidity for smart contracts. Yeah, that is on the tech side. On the ecosystem side, I think Arbitrum, it was...
Cody, actually,
Yeah,
I want to
ahead.
follow up with you on the tech side because one thought I have is that if you're new to this ecosystem or new to the environment of crypto, there's always a lot of promise of the technology. And I think about what you just shared in terms of them being an optimistic rollup. There's other ones that are out there. They're a little bit further behind. But one feature that sounds very promising is the ability to deploy code that's not in Solidity, because as someone who doesn't code, I am aware of some of the discussions about some of the limitations of the coding. And so having alternative coding language can be a benefit. The fact that has been shared that we haven't seen much good growth on the token side. Obviously, the Ray also shared that we're not seeing good price action. Do you have a perspective on whether or not the market is saying that these additional features that Arbitrum's offering aren't enough?
I
Or is it
don't
too
think so.
early to say?
I think it was expected for ARP to perform not really that well after the token airdrop. Like after an airdrop, really, if there's no bull market, there's no reason for the token to go up. People that receive the airdrop are going to dump it. Market makers that receive tokens and were incentivized to maintain the price as the services are no longer needed, they usually have contracts that last for 3, 6 months, etc. As those contracts come to an end, they are not incentivized to maintain prices anymore, and they can just dump whatever tokens they have, etc., etc. If you launch a token, if you don't drop into a bull market, that doesn't really factor as much. You can just swing by. But if you launch into like such terrible conditions as we find right now, like it's no surprise to me at least that ARP is not performing well.
Right. Absolutely. Ben, I want to bring you up. Looks like you have something you wanted to share on the tech front.
Well, I just find it interesting, some of the conversations happening that Cody alluded to, where we would be able to increase the usage of ARP token. When does that happen? Is it going to happen as the market starts to uptick? I would have to imagine yes. It's probably going to be closer to, I think they have a future unlock happening in March. And I have to imagine those discussions are going to heat up in Q1. But creating better usage of the token, combining it with Ray said, is kind of reclaiming prior ranges, maybe a more bullish crossover on moving averages, and then seeing those use cases create kind of better conditions for the token to almost, as we call it, like act as beta to Ethereum. That's what we're looking out for here, it seems like. And seeing those things pair up is going to provide the grounds for what could be a good 2024 for Arbitrum if it can kind of get those things together.
Yeah, it sounds like there's definitely some elements they need to address. And as you said, they have the time, they have the runway to perhaps do it. Cody, I want to come back to you. You started off talking about the robustness of the ecosystem before I interrupted you with that question. So could you just give us your perspective on that?
Yeah, so I think Arbitrum didn't have as many partners when it launched. Like as Optimism, for instance, a lot of the old DeFi projects from Ethereum launched on Optimism from the get-go, and Arbitrum for a few months. So they didn't have anything. It had like a neon meme that eventually turned into a rack as basically the only thing that was happening on Arbitrum. But as months passed by, developers switched to Arbitrum. I don't know what started, but they seem to like the tech. They seem to be, I don't know, maybe they like the vibes. Whatever reason it was, the TVL on Arbitrum went from like basically zero at launch on August 21 to 2.5 billion at the top for crypto in November 21. So yeah, it went from 0 to 100 in like no time. It's now sitting again after decreasing through the bear market at almost 2.5 billion, or like decreased since May. But yeah, again in May 23 got to that limit or to that level. It also has $1.5 billion in stables as compared to the 500 million that Optimus has. Has as much stables as Solana, which is really used a lot for stable payments. TVL right now, 1.7 billion TVL compared to Optimism 650 million. It has many more protocols, like 450 compared to Optimism 190, and a lot of really interesting protocols launch on Optimism. We saw a lot of like trading protocols like GMX, GNS, HMX, We saw a lot of options also have like options protocols like Topex back in the day. Pendle, I think the second chain that they launched was on Arbitrum, same as Silo. It launched first on Ethereum and then second chain on Arbitrum. It's just, yeah, developers seem to like Arbitrum. They seem to like it more than optimism for whatever reason, and that is reflected on TVL and number of projects, also number of users slightly above optimism. So yeah, I'm very excited about the ecosystem in Arbitrum right now and like in the months to come.
I think you could argue this is the bright spot for Arbitrum out of this conversation so far. I did want to ask you, we had this data point around the Arbitrum daily verified contracts chart. Looking at it, it looks as though we had very little activity relative to the maxing out point, which I think is in April of 21, if I'm seeing that correctly. And now it seems to have kind of come down and kind of moved into a steady state. Does this suggest that we've kind of hit the peak level? Let me back that up. How would you actually look at this information, and how does that relate to the robustness of the ecosystem in your mind?
I do not know what chart you are referring to, but
Okay.
That's my chart.
Oh, I'm sorry. I thought Cody put that in. Ben, maybe you could chime in on that.
Yeah, that's a chart just showing how many verified contracts are created in Arbitrum, and if you pull up the chart, it's on kind of Arbitrum's block explorer under charts and stats, I believe. You can see that there was a lot of activity that happened before the airdrop. Builders were well aware that it was coming. It shouldn't be a secret. And once that event happened, it's been trending down ever since. Over the last, I would say, month, it's actually been going sideways. And to me, this is actually a positive development. It feels like it's almost reaching this bottoming out period. And as Cody mentioned, there's a lot of things to like when it comes to what it seems like when developers are building. There's a lot of projects. There's good diversity of ETH sitting across various protocols. So I think this maybe sums up our little token teardown here, which is just, it's the ground is right for Arbitrum. All they really need to do is almost improve the usage of their token, and it will start to translate to price and other attributes that would kind of make it a good, attractable asset when it comes to moving down the risk curve out of Ethereum. And that would be a token that I would almost look for maybe in Q2 of next year to go ahead and outperform. And I would like to see these verified contracts pick up again. And it's not lower than it was in 2021, it looks like, but it is around 100, it looks like, per day, and it topped out around 400. So, I mean, it's taken a steep decline, and we're not seeing a lot of new innovation projects hit it of late, but you start to see those changes. I would expect to see this chart to trend up.
Yeah, I mean, it's definitely higher than throughout 2022. I think it was like around 20 contracts a day or something. Even late 2022, it drives up to like 50, it looks like, a day on average. And now it's oscillating around 100. And as you say, it seems like it's bottoming in a sense. I think both Arbitrum and Optimism and other chains that do have a token will use ecosystem incentives in the future to get developers to launch on their chains again. And I think they're waiting for like better market conditions to do so.
Okay. Good wrap up on the analysis. For all those out there who just listened to our very first token teardown, we'd love to hear from you what you think we got right and wrong about Arbitrum, and what data you would have expected us to cover, or maybe just your thoughts on some of the data that we did share. As I said, this is a brand new segment. We're looking at evolving this and bringing it back, covering more token and projects and other areas of the ecosystem. So we'd love to hear from your thoughts. Again, there is that survey in the link below. But with that, let's move on to the like it or spike it. You ready?
Yep, let's do this.
All right. Love it. Love it. All right. The very first one, Banana, a token for a Telegram bot, launches and immediately rugs. Like it or spike it.
Have to spike it.
Spike it on name alone. All right. Unpack this one.
Yeah, I mean, everything's in the title, basically. But Banana, again, was the latest Telegram bot that people were excited about. It had a lifetime volume of 200 million, 2 million daily volume, more or less, 1,000 daily users. And also people were very excited about it because it was going to launch a token. And I don't know if you all have noticed, but there isn't much going on that you can make money with. So yeah, people were excited for this to go up and be the next Unibot. And for a couple hours it was. and then people realized that there was a bug in the code. Long story short, there were some sell taxes. So like the idea is that every time you sell the token, the devs get 5% is usually the sell tax. In this case, it was 4%, but the issue was that when the sell taxes didn't go to the devs' wallets, they stayed in the user wallet. So if I have 100 banana and I sell that into the pool, I still have 4 banana. So what did people do? So they just buy, sell, buy again, sell again. That until there was no liquidity in the pool. So it went from like 70 million in market cap to virtually zero in like the span of 30 minutes as expected. The devs or like the team says that the token was audited. I think someone posted the code on GitHub and the code on ChatGPT, and ChatGPT was like, yeah, this is the issue. So I don't think anyone looked at the code really.
The AI bots are coming for the bad code. Okay, well, maybe that's a new process that's going to come and play out. Everyone's just going to throw the code into ChatGPT. I don't know. For all those listeners out there, next time you see something with a fruit name other than Apple, you may want to consider giving it your money. Let's move on to the next one, which I think is actually rather exciting. We've covered this a couple of times, including our conversation on whether or not we would invest in it. But FriendTech surpasses 20 million in TVL. Like it or spike it.
Like it.
All right, give us the good news on FriendTech.
Yeah, so as you said, Marconi, it went above 20 million TVL, almost 23 million right now. It was at 5 million just at the start of the month, September 1st. It's gotten $7 million in fees by now. Over the weekend, it paid creators or like key holders $500,000, which is 3 times as much as all ETH NFTs paid their creators. It also had more volume over the weekend than all of OpenSea, which it has happened before on the latest peak. And yeah, this was driven by a second bump in activity. Not as big as the first one. We saw like more transactions through the day, but it seems that prices are going up, therefore volumes are also going up. And yeah, I'm very excited about FriendTech, but I don't know if they will maintain this activity. Like I think the way that pricing works, the responding curves, has added like financial speculation to it and got people excited. I don't know if it's very sustainable, and people are also like trying to farm it because it's supposed that there will be a token that is launched in the future. So you can see this as like farming pool on Uniswap or whatever. Yes, Marconi?
Yeah, I was just thinking, you said that they were speculating that a token was coming out. I think of all the times been asked, do you need a token? And is this a case where they actually need one? There's utility to it.
I don't know. I think they're still like, they haven't released the full, or like they're still tweaking things around the app. They didn't launch a fully developed app as far, like if you play with it, like you cannot, like the chat was very basic and a lot of things were like not fully there, and they're still tweaking around things. So I think between now and the airdrop, they need to have a better product. If there's an airdrop, which I think it will launch eventually. So I think they need to keep users on the platform, or like teasing this airdrop, getting some fees that can push the project up until token is launched, and then just tweak the project or the protocol to make it better than it is right now. And we maybe they find a way to use the token in a way that makes sense and like adds to the experience.
Well, let's see. For all those who are working at FriendTech, I suggest you get in touch with Cody and Ben. They can give you some perspective on designing your token to make it valuable. Just going to put that out there. You know how to get in touch with us. All right, let's get on to the last one. We've got Like It or Spike It, a paper co-authored by Vitaliks discussing privacy pools, a new privacy-preserving protocol. Like it or spike it.
Like it.
Well, I know you like to hide from everyone, Cody. Unpack this one, why you like it.
So this is an attempt to improve or fix Tornado Cash. If you don't know, Tornado Cash is a protocol that allows you to send your money there and then withdraw it. And the idea is that like it's mixed with other money or like other tokens, and you will not necessarily know which persons are withdrawing those tokens. So like the idea is that you can, in a sense, get yourself or get your trades lost in the tornado pool. But the issue is that it's this no way to dissociate the licit funds, that is people who maybe have gotten funds from working and like they get paid in crypto and they don't want any random person to be able to trace them through the chain. So they send their salaries to Tornado Cash and then they withdraw at a later date. So that would be a licit use from illicit use. So that would be like hacks, drag trade, whatever, like all sorts of bad stuff that there have been usage of Thorchain by these malicious actors, Tornado Cash by these malicious actors. And you cannot really disassociate licit from illicit funds. There's no way to like separate them. So these privacy pools attempt to fix this, and the idea is that you can prove that your money doesn't come from illicit sources without revealing your entire transaction history, which if you want to maintain your privacy, you don't really want to do that. So you can do like, there's different methods of like creating these association sets. So you associate certain deposits and you can associate them by like the previous activity that they've had. You can associate them by like the time. There's different methods of doing so. And you can prove that your withdrawal comes from this set of deposits without necessarily saying which deposit particularly it comes from. Therefore, you keep your privacy, but you're also proving that you are not, like your money doesn't come from illicit activity. I hope that was a good enough explanation because I know it's a bit complicated.
Well, privacy is a bit complicated. No, I actually thought you did a really nice job there. And it's interesting because there's some people in the community that want to fight the idea that any privacy, everyone should have the same amount of privacy regardless of their actions. This seems to be taking a more nuanced approach that says, listen, privacy is a right, but there's also the fact that there are illegal activities and we don't want to be associated with those people. So they're good angels and bad angels both want privacy. We're going to give tech for the good angels that are still doing things right, but don't want their funds to be known.
Yeah, exactly. Like I think that's the argument that like privacy should be enabled by default, but also like if law enforcement or whatever has probable cause, then you should be able to say, yeah, like these are my transactions, this is from the funds that where it comes from, or like at least disassociate your funds from illicit transactions and prove that like your money doesn't come from what it shouldn't.
Yeah. What's also interesting about this is that this would completely upend the AML KYC model. Because if you could have some kind of mechanism that allowed you to prove privately that your funds came from a place of without any kind of illicit ties, you wouldn't actually need the AML KYC.
Correct. But I think this will get a lot of pushback because I don't think AML and KYC are really about that. So.
Oh no, Cody, don't be dropping your conspiracy theories. You don't have your privacy enabled yet, not on this podcast. All right. No, we'll definitely revisit this. Now I hear what you're saying, but very interesting project and very interested to see how this comes to pass. I know with privacy, it's always technically challenging. So we'll see how the paper actually comes into reality. All right, with that, let's move on to our next segment here. We've got Ben to talk about what's on his radar. I'm excited to hear from you. You had a piece that came out about the Bitcoin Milkshake, and I think you're going to walk us through that. So Ben, why don't you tell us what's on your radar?
Well, I was actually going to start off saying this ties into what Ray was saying earlier. So the fact that you are tying up our names probably is fitting here. But so if I were to kind of sum this up to start, I'd say that I'm waiting for the next phase, the milkshake moment of the cycle. And if you remember what Ray was talking about, he was kind of saying he has like the little optimism, and he's also kind of waiting in terms of a market update. Now, most of us have seen the movie There Will Be Blood. It's about oil, and it has this moment that exhibits just pure greed. It's the moment where the character Daniel Plainview tells his competitor, who is also, he's a young adult in the oil industry, but he basically just steals his oil. And to use the quote, I drink your milkshake. It's a helpful reminder for what is the next signal we are waiting for here in this upcoming, hopefully bullish halving cycle. All right, so I mentioned this last time I was on. I also wrote about it last week in Espresso, but I want to see Bitcoin simply suck liquidity and volume out of the crypto market. It happens and often helps initiate a new flow of money and acts as almost a reset for the market. And when volumes for altcoins and memes unfold, this tends to take place near the later stages of these mini cycles. And when I mean unfold, I mean a lot of attention is taking place with kind of these fringe high risk assets because interest is at a very, very low point. But this is how, when Bitcoin decides to rear its head, it can go ahead and attract all the outsized interest, volume, liquidity from all the fringe assets and brings it right into its domain. And right now, the moment we're waiting for is that sort of, Bitcoin's going to grab the market by the horns and say, it's time to go. We're moving forward. And the type of kind of liquidity suck that we're looking for is one on like a multi-year type of cycle. And yeah, we need to see it just suck liquidity out like a greedy oil man, essentially.
Okay. The greedy oil man. I have this image in my head. So other than having Daniel Day-Lewis in my head, I'd rather have something more closer to crypto related. What signals are you looking for exactly?
So volumes for altcoins, while they were taking most of the volume, and some days we saw altcoins actually have more volume than both Bitcoin and Ethereum, especially in the perpetual futures market. And now we're starting to see that wane a bit. A lot of the attention kind of has gone over to the FriendTech side. And to me, this indicates that we're really at the latest stage of this cycle. And now it's just a waiting game. The pump is primed, the straw is in the milkshake, and we need to see Bitcoin make its move. What is the trigger? Is it the Bitcoin ETF? That's like the easiest explanation we can all kind of default to, but in reality, it does not need to be that. Volumes are so low that any major allocator wanting to, say, front run the ETF, it's going to be very difficult to hide that motive in this type of market. And it might be something like ordinals. I mean, the amount of activity that's taken place over there in terms of network activity is getting sizable. And so if there's any sort of catalyst, then this kind of is reminding me of what was taking place with DeFi summer before the massive run took place in 2020. If there's a little bit of catalyst that takes place on the ordinal side of things that makes the UI UX so very friendly and invites kind of new capital to get allocated, used in order to either just play with the tools or go ahead and make money using these new tools. And that is something to watch. I haven't taken a deep dive into ordinals of late, but I wouldn't forget about that. It had its kind of initial coming out moment. I could see it rising up again, and in a sense, kind of be reminiscent of DeFi summer before the big 2020 end of year bull run finally took hold. So let's keep an eye out for that.
So you have external catalysts, which could be the news events you talked about, an ETF that could being approved or moving down the process that could drive this. But you're also arguing, let's not look outside the ecosystem or not sleep on the signals within the ecosystem, such as ordinals, which could suck up some of the liquidity from the altcoin environment.
If FriendTech can just draw everybody's attention the way that it has, there's no reason ordinals can't do the same. And if that translates to price activity, and everybody knows an ETF is essentially on the horizon, that is the sort of catalyst that can create a bit of FOMO in the market, can go ahead, attract all the attention, the volume, and essentially liquidity on the fringe assets into Bitcoin. And we would be off to the races, I think, before anybody anticipates it.
Off to the races. I know we all want to be riding on that. Ray, I just want to bring you in here. You start off the show giving a perspective at the macro level, talking about the external catalysts. What is your take on the milkshake theory that Ben's laying out here? Are you looking for something similar, or do you have sort of a counter perspective? Give me that.
I like it.
Yep.
Yeah, I like it. I'm not bullish on ordinals personally because of the whole NFT association, but I do like any. I like mechanisms that are able to spin up fees on the Bitcoin network for miners. And I like that ordinals also has the capacity to create an alternate revenue source for miners because they're going to need that going into and after the halving. I also like the self-branding capacity that exists on via ordinals. So I do see some crossover between what FriendTech is doing and what ordinals has the capacity to achieve. I love Ben's Milkshake Theory. Yeah, in short, without having to go into 1,000 words, I like it. I think it's timely, and we're just waiting for that volatility to kind of break out. And I think everyone knows what those catalysts are. We're just waiting for the activating agent to catalyze that kind of explosion. So I love his theory.
Yeah, I love the visuals here. We got Daniel Day-Lewis taking someone's milkshake. Now I've got this catalyst movement. I've got chemistry in my mind. It's taking me back to high school. A little scary. I didn't do well. All right, with that, let's get into the last segment here. As we always do, we like to have a little fun at the end because so much of the conversation can be a little serious. And this I found a little interesting. For those who are unaware, Vitalik Buterin's Twitter account was hacked, which led to an unfortunate scam of some kind, which lost some people some money, which is a good reminder. If anybody on Twitter or any of these other socials is asking you for money, probably best to ignore them. But it turns out that what happened with Vitalik was that his T-Mobile account was hacked through a social engineering SIM swap, and it was actually tied to his Twitter account. So for the 2FA, which allowed the perpetrators to get access and then take over. So I wanted to ask you guys, just a little bit of fun here. What would you do if you had Vitalik's Twitter account for 24 hours? And kind of looking for wrong answers, but anything will really do. Cody, I'm going to turn it over to you. I know you spend all your day on Twitter with your privacy-enabled settings. What would you do if you had Vitalik's Twitter account for 24 hours?
I mean, if you want to maximize how much money you make, you just can accumulate like coins that have been driven into the ground and just start writing as Vitalik that you're bullish on them, and when it eventually is found out, you just short them into the ground again. I guess you could do that a couple times. Or just build a massive short on Ethereum and say that you as Vitalik are dumping all your ETH because you no longer believe in it. I don't know if that's very believable by the community, but I think it would create some fun press action.
I like that. Maybe he could repost some of the early pieces he wrote for Bitcoin Magazine back in the day. Ben, what about you? What would you do if you had the account for 24 hours?
Oh man, everything I came up with was like super serious and not fun, and it's kind of boring. But as we're sitting here, I think what would drive the most humor and kind of fun in the crypto Twitter sphere would be to see if he could get in on the Elon and Zuckerberg match.
Oh,
say he started to train and see how that unfolds.
I think I need some AI imagery of the body below the neck, because if he tells me he's going to come out swinging, I'm not really buying it. But I think that is a great way to take over his account.
Maybe I'll just spark him into like Ultra Chad mode and just get super ripped.
His dad is an absolute Chad. Like if he gets trained up by his dad, like he can destroy Zuckerberg and Elon.
I love it.
I know. Yeah, I don't know if you'll see him, but he's a massive towering trash.
Tear him down like an algorithm. Just
that joke's coming out. We know it's the end of the show now. Ray, what about you?
I would post that Ethereum is going back to proof of work through a hard fork, and say POW is the only way forward for any real cryptocurrency.
Oh, I love the inside baseball with that one. That's clever. I was thinking maybe I would just do a new image of him in a unicorn outfit for like every minute, just kind of keep on updating that. But I think what you just said really, really takes the cake.
Sounds like an NFT collection right there. It could be very profitable there.
Somehow, some way after the hack, we're still thinking about ways of making money. Okay. With that's going to wrap up this week's show. I want to thank Ben, Ray, and Cody for coming on and talking, and for introducing the brand new segment where we did the token Teardown. Obviously something we're going to continue to evolve, but I think you get a sense for how we're looking at this environment, trying to find opportunities that price action alone does not really highlight. We need to take a deeper look, and that's what we're looking to do here. So if you like that kind of analysis and you want to hear more about it, I suggest you hit the like and subscribe button. And if you think we missed something, and if you want to tell us why we're wrong, I suggest you do the same thing and then just add something in the comments, because we're actually pretty responsive. I can't speak for all the other crypto influencers out there, but we do a pretty good job of trying to communicate with our audience. And I've got something to share, because I know at this point I sound like a broken record, but we are moving that much closer to getting our hardware set up so that we can actually do the video. And I think as we start to move into more of the analysis of the token teardown, we have all the information that's shared by these great analysts. We want to make sure that you can actually see it. And we are going to get that much closer to where we're getting the hardware that we can actually do our video. So stay tuned. You should be seeing more of this in the next couple of weeks. But until then, continue to tune in to the audio only. If you've got questions, leave them in the comments. And I would suggest following all of these three gentlemen on Twitter where they're sharing their insights during the week before we have them on the next show. Okay, with that, it is and continues to be a crazy time in crypto. Ray did a really nice job at the very beginning of this episode talking about the fact that we're staying in a range, whether it's an outside catalyst like an ETF approval or moving forward, or an inside catalyst. This market could change on a dime. So stay focused, keep your powder dry wherever it's sitting, and stay safe with the way you're thinking about the market and approaching it. And tune in next week where we'll show more alpha. And until then, this is Marconi White signing off.